Be Wealthy and Smart, episode 1352.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the market pricing in 2 interest rate cuts. Now, interest rates are still slightly over 7%, but that's down from 7.7% a couple of weeks ago for a 30-year fixed-rate mortgage. Signs of an inflation cool-down prompted markets to grow more optimistic about the possibility of the Fed cutting interest rates maybe as much as 2 times in the second half of the year. And that led all 3 major stock market averages to hit new highs on Wednesday. For the week, the NASDAQ rose more than 2%, the S&P was up more than 1.5%, and the Dow was up more than 1%, closing above 40,000 for the first time ever on Friday. It was mainly April's reading of the Consumer Price Index, which showed that core prices, which take out the volatile prices of food and gas, rose 3.6% over last year, which was the lowest annual rise in 3 years. That's what prompted the markets to price in 2 interest rate cuts this year for the first time since early April. The Fed has projected 2 or 3 interest rate cuts at some point this year. Now the key question is, are 2 interest rate cuts really in the cards, or is the market jumping ahead of the Fed again as it did in early 2024 when it priced in nearly 7 interest rate cuts after hearing positive economic data? This week, on Wednesday, we'll get the release of the minutes from the Federal Open Market Committee's May meeting, which will possibly give a better look at the discussion amongst Fed officials. Also this week, AI leader NVIDIA is going to report earnings after the closing bell on Wednesday, which is a big deal since they're one of the largest stocks making up the S&P 500 index. Expectations are very high that NVIDIA can continue to outpace expectations. For the second quarter, analysts project earnings growth of more than 120% and nearly 100% revenue growth. NVIDIA's stock is up more than 86% this year and more than 200% over the past year since NVIDIA kicked off the AI cycle news with its big earnings report that exceeded expectations in May of 2023. And now it seems like many companies on Wall Street are talking about AI and trying to put it into their earnings call as many times as they can. One company reportedly said AI 270 times in their call. But AI is finally moving beyond the Magnificent Seven of NVIDIA, Microsoft, Alphabet, Meta, Tesla, etc., as energy and utility companies are now 2 of the best performing sectors in the S&P 500 this year, both up more than 13%. More than 66% of companies in the energy sector mentioned AI during their earnings call this quarter, up from 19.1% last quarter. Meanwhile, while everyone is focused on their favorite stocks and earnings, housing experts say home prices will continue to rise for the rest of 2024. This goes against what many people have been saying this year because they've been expecting a housing crash, but it continues to not materialize. In fact, I think the opposite is going to be true. We'll have a strong market this year and next year into 2026. Fannie Mae forecasts nearly a 5% increase in prices by the end of 2024, and the National Association of Realtors is predicting the year-end median price on existing homes will hit $393,000, up from $387,000 last year. Again, with such little inventory available, that's what's really driving the higher prices. Doug Duncan, Fannie Mae's chief economist, said even with high mortgage rates, the inventory shortage is causing the problem in price. Total housing inventory increased about 5% to 1.11 million at the end of March, according to the National Association of Realtor data. By comparison, the average inventory between 1982 and 2024 was 2.23 million units, or about double. March's home for sale listings equaled only 3.2 months' supply. A balanced housing market has around 6 months of supply, so you can see the market is still very tight in terms of lack of inventory. And housing data shows that home buyers are experiencing a price crunch. About 30% of homes sold above the listing price in March. Yearly U.S. national home prices also gained more than 6% in February, according to Case-Shiller Index. And reportedly, there are still bidding wars and 3 offers for every home listed last month. So the good news is inflation seems to be moving in the right direction, just not as quickly as the Fed would like to see. We've come down in a major way from the 8% inflation we had years ago to the 3% range, but the Fed wants it lower, in the 2% range. This week we'll get information on the consumer sentiment, and that will give us more of an indication of how the consumer is feeling. The last consumer sentiment report that we saw looked like the consumer was getting concerned and starting to spend a lot less. And the main sticking point in inflation is auto insurance, which doesn't make sense for it to continue to be high, and looks like we'll get through a period where auto insurance prices increased and then will stabilize. And since they've been abnormally high at 21%, that can help the inflation equation quite a bit. So we'll be hoping to see auto inflation numbers come down and rent cool off a little bit. And since it takes about 1.5 years for interest rate hikes to really kick in and slow inflation, this would be about the time horizon we could start to see some weakness. So we'll be keeping a lookout and reporting back to you about how it's going. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.